Yes. Yes, I see it.
All right.
Yep.
So, basically we just have the three most recent quarters, the actual results in here, columns K through M. My projections for Q4 are in column N there. So I've gone back through and kind of adjusted everything for the historical periods as well as I can. There are certain things like, for example, the full self-driving take rate. Tesla does not disclose that each quarter. So what I try to do is back out an estimate, or back into an estimate of what I think that spend
So you have
based on.
18% right now, right? 18% for that for
Yep.
Q4.
So my estimates were 18%, basically just 18% in Q2 and Q3, and I'm keeping that the same in Q4.
And this is
Um,
global or just in North America?
this this is global, and maybe just
So
for
globally, 18% of people you're estimating are taking full self-driving with their delivery. They're taking that option.
they're
That's
taking
what
that
we're
option.
estimating.
Yep.
Okay.
Which is a bit of a change actually, because last quarter I was assuming a pretty decent drop. I think I assumed it was going to drop from 18 down to 13%, because you
Yeah.
had the introduction of full self-driving subscriptions.
Yes.
But what they said on the call, what I think Zach said on the call, was that they actually didn't see a drop off in the purchase option despite kind of the introduction of full self-driving subscriptions. So that was surprising to me and a bit counterintuitive. So that does kind of create some extra margin potential over time. Maybe before we jump down too much, we should just talk about the delivery estimates. So I'm assuming just a modest increase in S and X deliveries, from 9,000 to 12,000, and then
Mm-hmm.
265,000 3 and Y to get to total deliveries in Q4 of 277,000.
How
So
come
not
such a
not
modest one question? How come, last quarter we got 99,275 Model S and X deliveries, which was a
mhm.
big jump from Q2 of 1,800 or 1,900. So how come such a small jump from Q3 to Q4 just to 12,000? What's your
It could be on the conservative side. I actually had
Mhm.
it at 15,000 just this morning, and I
Okay.
decided to drop it down. It seems like there haven't been as many X deliveries as far as I can tell,
Mm,
as when they were kind of running at full production. So I think when they're running at full production in a quarter, I think they get around 20,000 deliveries, and it
yeah,
seems unlikely to me that they're running anywhere near that right now with a lot of the kind of
yeah,
ramping that they're trying to do with Plaid. So maybe it's
okay.
12, maybe it's 15. It
You
doesn't
think it could
doesn't
be as
move
high
the
as
needle.
20,000 by any chance, like with lots of Model S deliveries or no?
I don't think so, because I mean, total capacity is 100,000 per year, I think, right? Out of
Yeah,
those, and so I think even I'd have to go back and check historically. Maybe I have the data in here,
yeah.
but they hardly ever, like, even so, like Q4 2020, it was 19,000. Um,
Yeah.
so
And that
even
was S
even
and
when
X combined, is that right? That
S
was
and
S
X
and X
combined,
combined. Yeah.
yeah.
So
So
this
I
quarter,
think
it's mostly all S's, and you're assuming, like, even if they're maxing out the S's, maybe it's like 11, 12,000 S's or something, and maybe a couple thousand X's or something, best case you're thinking.
yeah,
So you just put a
that
12,000. Okay.
Yep. Yep. So that's kind of the thought process there. You know, I had this a little bit higher too, the 3 and Y, this morning before I went and kind of changed it down. I do think there's potentially some truth to the rumors of supply constraints in China, and if that's true, then
Yeah.
you wouldn't have. I think a couple of weeks ago we were thinking maybe this could be 300,000 or so, but
Yeah.
after the wholesale report last week that came out of Shanghai, and
Yeah.
I just think a more middle of the road conservative approach is warranted given what we know right now. So
Yeah.
that gets to 277,000 deliveries for the quarter. And then, so obviously 18% of that total would be full self-driving purchases. And then
Mhm.
the thing that's new this quarter is that you have subscriptions. So I'm taking an estimate of the previous quarter's subscriptions and then adding 10% of new
Mhm.
sales to that total. So this would be full self-driving subscriptions should be something of like a cumulative aggregate over time. So as you get more quarters under your belt of having subscriptions, you're going to generally have a lot more subscriptions being added than being canceled. Um,
Mhm.
so that's a way where essentially the global full self-driving take rate is going to be higher than 18%, because some amount of those subscriptions will be
So you have
or
full 20. 27,700 full self-driving subscriptions, cumulatively to date by the
Yeah.
end of Q4. Okay.
Yep. Yep. And that's just an estimate. We don't really know the details on those. So
Yeah.
hopefully Tesla starts breaking that down over time, but it's for right now they don't. So
Okay.
that gets to total automotive revenue, excluding full self-driving and credits, which is kind of my own metric, but I think it's helpful to kind of get to like pure play automotive revenues of 13.4 billion.
Mhm.
Then I'm assuming that there's not any incremental recognition of deferred full self-driving revenue.
Wait,
Um,
one quick question, Matt, about the full self-driving subscriptions, the 27,700.
yep,
That's as of the end of Q4 or at the start of Q4?
at
Well,
the
I
end
mean,
of Q4. Yeah,
okay.
so it
Do you
it does
back
build
out like
slightly.
Yeah, do you back out any of because some of like a large percentage of those full self-driving subscriptions, since it's only been live for a couple quarters now, would probably only sign up in the month of December, so they might not even pay much for the whole month, for the whole quarter, right? But
Yeah,
it's probably overall it's somewhat marginal for the whole earnings estimate, but it's interesting to think about.
yeah. So it's there's a concept in financial modeling called the mid-period convention. So you kind of,
Hmm.
for something like that, you assume that you would basically count the revenues, excuse me, like in November, and
Hmm.
multiply those by three, and that would be your estimate for that period. So that's
Hmm.
essentially what I've done here.
Okay.
It's
Okay.
hard to tell,
Good.
but they launched this. I forget exactly which month they launched this in Q3, but I think it. Do you remember off the top of your head, Emmett? I
Yeah, I think
think
it
it
was
was
in
like,
July. I think it was
oh,
July,
was
if
it
I
July? Okay.
recall. Yeah. Yeah.
So based on my modeling, I assumed it was 20 million in Q3, and then it jumps to 55 million in Q4.
Okay.
So part of that would
Wow.
be, um, I thought it was a little bit later in Q3, so
Maybe
maybe
it was
it's
end of
slightly on the high
July or
side.
early August, but I thought it was July. I thought it was around Independence Day, somewhere around there, but I could
Yeah,
be wrong.
I mean,
I'll
it's
Google
a
it while you're talking.
all
Yeah,
right.
keep going.
It's a small percentage of the kind of overall revenues and margin, so it doesn't drastically move the needle one way or another. But it will be, I would say, increasingly important over time. But it's going to be hard to fact check that if the IR team doesn't give us more details. Um, so maybe just while you're looking that up, I'll just comment on a couple other
July
things.
22nd, I think.
July 22nd. So you had
I think.
like
That's when I see a
basically
Consumer
you
Reports article about it. Yeah.
So basically, you only had like 2 of the 3 months, which would have been available for revenues
Mhm.
in
Mhm.
Q3. So you would need to extrapolate that, like the 20 million that I was estimating would basically be like 30 million, and then you're adding in another quarter
Yeah.
of higher delivery volumes also. So to me,
Yeah.
that looks about right. That it should more
Yeah.
than double, almost triple.
Yeah, I would say so. Yeah. July 16th. Although you have a whole bunch of yeah, it should go up. I mean, you have a whole bunch of people maybe waiting to get it that all sign up at once mid-July, as soon as it opens up, and then so maybe the take rate just is not as high going forward for new yeah, it's hard to say. Yeah, we'll see. It'll be very interesting. It's a little bit of a
Yeah,
variable.
and
Yeah.
I would think once they actually get full self-driving to kind of wide release, instead
Yep.
of this beta, the subscription rate should go up quite a bit.
Yeah.
Because I mean, if I were in a
Yeah.
position to consider subscribing right now, I don't really think I would, because like what, I've got to get my safety score up to get the
Yeah,
benefit of
exactly.
the features other than navigate on autopilot, which is like really the only one
Yeah.
that's that useful right now. I mean, the other stuff's kind
Yeah.
of almost like a gimmick is too negative of a term, but like the driving in a straight line on city streets is not particularly useful. I don't think.
Yeah. You think Q1 or Q2 sometime it'll be more widely available. I mean, they're progressing
Yeah.
pretty fast with these new releases, and Elon seems very confident with this new release. He should saying it should be called 11.0. So a
Yep.
few more confidence intervals, signals to me a few more nines, maybe a couple more nines of safety, hopefully, and maybe that's the point where they can wide release it. But they'll still
Yeah.
want people to be sitting in the car and pay attention, and they'll have to sign all, electronically agree to all kind of disclaimers every time they turn it on and such.
Yep. And you can imagine, when they do get to that point, then you'll have this huge kind of margin benefit of recognizing a lot of this deferred revenue that's been building up on the balance sheet.
Yeah.
So I mean,
1.7 billion, is
1.7
that what you see,
billion
right?
is
Yeah.
is my estimate. I mean, the total deferred revenue balance is higher than that, but this is the portion that I believe is applicable to full self-driving.
Yep.
So I mean, this balance just continues to kind of grow at an exponential rate, and at some point they'll start recognizing that, and that'll flow through the financials. Which, yeah, obviously that's a benefit that I think a lot of analysts will adjust out. So like you could imagine if there
Just
was
be
a
a
$1
one-time
million,
thing. Yeah.
yeah. So that's a one-time thing, but then you have to also remember that like half of the revenue for full self-driving for current period sales is still not recognized. So that's not a one period thing.
Yeah.
So
That's true.
even though you're deferring 42% of full self-driving revenue, there's still 300 million in sales,
Mhm.
or a recognition of new. So if you could recognize all of that right away, then there'd be 575 million of full self-driving recognition.
Mhm.
So that's not a negligible impact to just be able to recognize current period sales, and that's something that I don't think most analysts are accounting for.
Yep.
So then moving down, credits have been a little bit low the last
They
two
have been.
quarters.
Yeah.
And I believe, based on, I think the accounting for credit sales, it's very similar to accounting that I used to see when I was doing renewable energy credit sales, where they're essentially recognized in the period when the credits are transferred, not when the kind of underlying delivery takes place. So
Mhm.
like I would always talk about them as this phantom asset because there was no journal entry at the time the credit was generated.
Hmm.
Um, so you can have like a huge buildup of production, and then you can essentially just deliver the credits whenever you want to, and
Yeah.
you get this kind of big influx both of cash flow, but also of earnings.
Yeah.
So it seems likely to me that that's something that's been going on in Q2 and Q3 when those deliveries were going up but credit sales were going down.
Yeah.
Um, so I've assumed a modest increase here to 400 billion, 400 million. It wouldn't surprise me if that was actually as high as, I don't know, 750 or 800 million, just
Yeah.
because it
I
does
wouldn't be
seem like there could be some
surprised.
pent up.
Yeah, the phantom asset is a great way to describe it. Like, I wouldn't be surprised if it was a phantom asset, if it was like 2 billion of phantom assets sitting on their balance sheet there that it could start like materializing when they, but although that would
Well,
be
that's
based
the
on
funny
what they
thing. It
could
doesn't
sell it
even go on the
for.
balance sheet. It's like
Yeah.
there's
Yeah.
no
It's
way
like
to
a 2
track it.
billion phantom asset sitting there that
There's
no one
no
can
journal
see.
entry at all.
Yeah.
It's the
Yeah.
most bizarre accounting. It
Until
makes
they
no sense.
decide to deliver it or sell it, or until they transfer it, right, and they sell it, and
Hmm.
but they also, I know the mechanism of them selling it is dependent on what the buyers are willing to pay. Like, they
Yep.
probably don't want to sell it for pennies on the dollar. I think Elon has made comments in the past they're selling it for like half or even less than half of what they're worth or something. So there's a lot of variable valuation in that phantom
It's
asset no one
true.
can really figure out. But a
It's
maximum value could be like billions of dollars of a phantom asset, but in reality, they might only sell it for a quarter of what the maximum value could be.
Yeah, and so it's certainly possible that kind of those low credit sales we saw in Q2 and Q3 were just the result of decreases in price rather than kind of like
Yeah.
building up this phantom asset. So if that's the case, then maybe we can expect a continued downtrend in credit sales.
Yeah.
But
You
it
know what'd be
seems
great is if we could find someone, a specialist who's, call it like the phantom asset interview or something, just a specialist on the energy sales. I mean, there's got to be people out there that like their livelihood is revolving completely around buying and selling these regulatory credits, and they understand the ins and outs as well as anyone. If anyone who's following us or wants to tweet Matt and I an idea of someone who can shed some more light on this phantom ass, it would be really cool. I'd love to interview someone who understands it better because it is a huge variable that no one can really figure out. But the more we can understand it, the better.
Yeah, and assuming that they're using the same accounting as I was using in my old job, which I believe they are,
Yeah.
then really you would just need someone that has the knowledge of these different credit markets. Because I understand the accounting, but there's
Yeah.
these markets in California, there's
Yeah.
markets in Europe, and
Yep.
who's got what percent of their obligation filled,
Yep.
and kind of what those contracts are. I know there was
Yeah.
a big deal with Stellantis, but I haven't seen any news on that in the last like 12 months.
Me neither.
Um, so yeah, if anyone knows more details about that, we'd love to kind of
Yeah.
pick your
Please reach
brain.
out to us. We'd love to interview you about it. Yeah. All right. Sorry to disrupt. Keep going.
Yeah, no worries. So I have a separate kind of more detailed model that I've excluded here that
Mhm.
builds up lease revenue.
Oh, I've
So
seen some
that
of that. That's pretty complicated. Yeah, you
it's
don't need to
a
go
it's a
into
bit of a
that right now.
monster. So I won't go into that one.
Yeah.
But
Yeah.
there's an output from that feeds in here, and so I'm assuming 410 million of lease revenue.
Okay.
Um, and then I've got energy revenue increasing about 30% quarter over quarter, and then
Mhm.
services revenue also increasing about 30%.
Mhm.
Services actually declined in Q3, and energy sales were basically flat in Q3, which is a little bit surprising to me. But I think we're probably going to see a big increase in
So
mega pack deployments on energy.
you have
Yeah,
energy revenue at 1.1, just over a billion
yeah,
and
just
48 million,
billion. Yeah, yeah,
1.048. Okay, and services 1.028 billion. Okay.
yeah. And services, we'll talk about this more in a minute, but services includes used cars, used vehicle sales,
Oh, that's
uh,
big. Yeah.
which is, historically services has been like a money losing part of the business. You think of like supercharging and like premium connectivity and a lot of things that presumably they run close to break even. But with used car prices in general and used Tesla prices in particular being so
Yeah.
resilient right now, this has become a source of increasing margins over time. So maybe we'll touch on this in just a second when we get down to margins. But adding all that together gets to total revenue of 15.893 billion, which is
Mm.
a increase of just over 2 billion from Q3, if this is correct.
Okay.
So then one of the things that I do differently in this model versus I think anyone else is I break out what I call core manufacturing gross margin. So think of this as automotive margin where you exclude full self-driving, like the gap portion of full self-driving revenue and regulatory credits. So I've kind of back tested this, like I was saying at the beginning. And so in
Yep.
Q3, that increased to 26.7% based on my estimates, which was a huge surprise, I think, to
Wow.
most people.
Yeah. It's big.
Um, but in Q4, I think you've got those same trends. You don't have Berlin and Austin online yet, so you're not getting like the depreciation drag on from those plants. Instead, you just have like kind of continued operating leverage coming out of Shanghai in particular, but also Fremont. You've got the Model S line and X line contributing a little bit more than they were in Q3. And then on top of that, probably the bigger driver is you have price increases, which have been stuck in the backlog really in most of Q3, I think. So some of
Mhm.
those will start to come through in Q4.
That's a big deal, those
Um,
price increases. Yeah,
yeah,
I think 28% is, I mean, I guess I'm just a Tesla bull and biased, but I feel like
it's
the total revenue number you're being kind of conservative on, and the core manufacturing you're being the gross I feel like it could be like 16.5 billion total revenue and like 29 or 30% core manufacturing gross margins. But I'm just so bullish on Tesla,
yeah.
so it
Well,
probably,
well, so we'll do a couple sensitivity analysis once we
yeah.
finish getting through this. We're almost through. I mean, really
Yeah.
gross margins the
Okay.
most important stuff, and then
All
we
right.
can kind of blast through the other stuff, and we'll run some sensitivities. But um,
Okay.
so 28%. I agree with you. It could be on the conservative side, but I think at least it stands to reason that there should be a at least 1%, I think, increase in that core manufacturing gross margin this quarter
Yeah.
for those reasons, unless there's just like kind of crazy supply chain issues that we're not aware of, which
Yeah.
is possible, but I think it's unlikely.
Hmm.
Um, so then you get gross manufacturing, or you get automotive gross margin. Then you add back in your full self driving and like acceleration boost and some of those other kind of like software based
Yep.
margins. Add back in your credits, and you get to total automotive margin of 4.578 billion, which translates to 33.1%, which is a like phenomenal number that like analysts 2 years ago or even 6 months ago probably thought would not happen. Um,
Wow.
so this we've said this a couple times. This could be a local high. I mean, I think as you get
Yeah.
Berlin and Austin online, that's probably going to drag margins down a little bit up until they get to the point where they're kind of producing at margins more like Shanghai.
Yeah.
And they probably won't ever get quite that high, but
Yeah.
you'll have that kind of ramping issue that we saw when Shanghai ramped.
Yeah.
Um, so putting all that together, energy gross margin, I'm assuming that's zero. Historically, that's kind of bounced around between minus a few percent and positive a few percent. And then
Yep.
services has almost always been negative. It was minus 1.8% last quarter. I'm assuming that just is zero, in a slight improvement to zero in
The used car
Q4.
sales stuff. Okay.
Exactly. Yeah, the used car sales, I think, is probably the biggest thing.
Okay.
And you've kind of seen that over the course of this year. I mean, it went from -7.8 to -3.7
Yeah.
to -1.8. So you've seen, during this period of time when used car prices have been rising,
Yeah.
that gross margin has been rising a little bit as well.
Yeah, I've seen anecdotal stories going around this quarter in particular of people saying, "Oh, I traded in my Model 3, which had full self-driving on it for 45,000, great price, and I saw them resell it without full self-driving for 55,000 or something." It's like a loaded Model 3, and so you see these turnaround stories by Tesla, these anecdotal turnaround stories of them. They must have really impressive margins on the services for, yeah, I would say, for the rental. I mean, not for the rental, for the resale value
Yeah.
stuff. So yeah, I could see that being zero or even positive, but yeah,
Yeah,
we'll see.
I think in one thing I get really excited about that I think a lot of people forget is that in Q2 of next year, that they start getting the original Model 3 leases back from, like, 2017, I think it was, because those
Oh
were
yeah,
4-year leases.
I remember
And so
those
those,
leases.
like,
Yeah,
Tesla required basically that
you
the
gave your
users
car
couldn't
back.
buy them back.
Yeah,
So Tesla's gonna have this influx of new used vehicles with an incredibly
yeah,
high residual value. So that's gonna
yeah,
be like a gross margin boon in Q2 that I think most people have just kind of like forgotten about.
yeah.
So
Mhm.
that's the most exciting thing on the horizon, I think, on services. But anyway, total gross profit of 4.578 billion, or 28.8% all in. Um,
Okay.
I've assumed a kind of modest increase on R&D up to 672 million. Same thing on SG&A up to 627 million, and then stock-based compensation increasing a little over 100 million. And that is potentially on the conservative side as well, because I think it's likely that Elon's CEO compensation plan is starting to kind of wind down the quarterly gap
Yeah,
hit that's going to be providing.
yeah,
But with the workforce growing and these SBC awards for new employees, I think that's my thinking is, anyways, and I could be wrong on the exact math of how that pans out, but my thinking is that the kind of new employee SBC is going to outstrip Elon's kind of decreasing CEO performance package impact.
hmm,
So that gets to total operating income of 2.686 billion, and then we'll just kind of zoom through these other items down here. GAAP net income of 1.88 billion attributable to common
hmm.
stock. GAAP income or earnings per share of 1.67 billion, and then
Wow,
adjusted EPS of $2.20.
wow.
Um,
So that's kind of
so
your conservative number at the moment with this model. Your somewhat conservative numbers, $2.20.
yeah, and it's I put out a thread, I think, last quarter, where I basically said, like, I don't want to try to go high. I don't want to try to make like aggressive assumptions or bullish assumptions on everything. I want to try to give like a middle of the road estimate for each one of these numbers to arrive
Hmm,
at like a middle ground. So this is
hmm.
kind of like my middle of the road, like P50
Yeah,
probability of what I think could happen. Wouldn't
I
surprise
see.
me, if like there's some more bad news than I expected, and maybe it sounded like
Hmm.
$2 or more good news than I expected, and it's 240 or something like that. So maybe
Yeah.
we can take a stab now at like, let's run through some of your assumptions. What would you have changed on some of these, and we can look at what that earnings per share impact would look like.
Yeah. So go back to deliveries of Model S and X to 15,000.
All right. Oh, and price increase. We didn't talk about that either. I basically assumed a modest price increase on 3 and Y, translating through
Okay.
here, but nothing on S and X. So if
Okay.
you want to adjust any of those, we can do that also.
Yeah. No, I think that's fine. I mean, the Model S and X should be a little bit. I think there's a higher ratio of long range Model X is getting delivered now than the Plaid. So maybe we want to lower that price. I'm thinking
Sure.
just like,
Like 115 or something like that.
yeah, 110 maybe. I don't know.
Right. This
Uh,
is like inclusive of all the options and everything, like your paint color and all that.
Yeah, yeah. I just think there's a lot of people that doing the long range Model S basic, no, not too much stuff. Just that's my suspicion. And then the Model 3 and Y, let's move that up to 275. So let's say okay, 290. And what else was I looking at that I thought was low?
You mentioned the core manufacturing margin, but do you want to adjust full self-driving or any of those other things?
No, I think that's fine. That seems about right to me. I'm just putting my own personal estimates in this. It's a little higher,
Oh,
more
credits.
biased.
That was the other
Credits,
one.
yeah, yeah. Let me put that at. Let's put that at 600 million.
All right.
Okay, because I think this could be a surprise. Every few quarters they have kind of back. It swings back. The pendulum swings back towards, and they've been selling so many cars the last few
Yeah.
quarters. They have so
Yeah, I
many
agree.
credits accumulated. They're going to be selling more.
I mean,
Some point.
600 could even be a low ball here.
Yeah, let's move up to 750. Yeah, let's move up to 750.
So
Because I
now I'd say it's on the aggressive side, but not unreasonably so, I don't think.
it's not unrealistic, but it's aggressive. Yeah, it's possible. And then the what was it? The ZV credit. Okay. Go to the services margin. Where's that? A little further down.
Do you want to do the core manufacturing margin, though? I thought you were
Yeah, yeah,
saying
do
that
that. Yeah, yeah, put that at 29%.
29. All right.
Yeah.
So almost
Okay.
it's just a 2.3% increase. That's actually not that crazy.
Not that
And then
crazy, but I think they have
services,
operating leverage. Yeah. So
yeah,
services, let's make it positive 2%.
yeah. So even that doesn't move the needle too much. It's only 21 million,
Yeah.
but it's
Okay, that's not too
a
much.
little bit.
Yeah, I mean these are all like realistically positive things I'm thinking. I'm not going like outside the box like the best scenario. I'm thinking like what's my top quadrant of positive,
Yeah,
like the bottom of the line, 75%, line. You were at the 50-50. Now I'm at like the 75% line of reasonable positive estimates in my mind. So, all right. So let's go down. I guess that's all the main things. I mean, I'm not going to change the cost SG&A or anything like that. So
yeah. So
let's
those
keep that.
couple changes are to get to $2.67. So a
Wow.
pretty drastic change in earnings per share impact
Yeah.
there.
Wow. Wow. So that goes from the last quarter, as you can see on this spreadsheet, was $1.86, which was a huge surprise. And this quarter, it could be 267, another huge surprise, so
One other thing that may be aggressive here is they've had a very low effective tax rate the last couple quarters. Let me just see what this is.
okay.
Um, so wait, that's not right. 2.5%. Oh, I grabbed the wrong line here.
Okay.
So in Q3, it was just under 12%. I'm assuming that's going to normalize back to 25% because 12% just
Okay.
seems way too low to me.
Yeah.
But let's assume it's 15% instead of 25%, which is certainly possible.
Yeah.
Then that gets to 296.
Wow.
So that could be another impact as well. That just kind of moves that bottom line number.
Yeah.
And
Yeah.
I don't know what consensus is right now. I haven't checked in a couple days. Let me pull it up here. So consensus for Q4 now is, let's see, 192.
Oh my
So
gosh.
this would be a pretty drastic beat on that number.
Yeah.
But
Huge.
192 just seems like dumb to me.
Yeah.
That's like the most conservative number I could really reasonably fathom. So
Yeah, that's what I'm
it's
saying. Like, we just gotta make it. Like, I hope the market just kind of stabilizes at the very least for the next month until these earnings come out, because it's like there's no way earnings are like below $2 in my mind, and more likely it's like $2.50 or potentially higher. Maybe as high as $3, like we're saying here, possibly. But it just seems like, yeah, I mean, the institutional portfolio managers, the analysts, sell side analysts, and buy side analysts, most of them don't understand Tesla enough on this scale to understand, how much it's growing. I think Elon tweeted the other day, or confirmed a tweet like the most underestimated thing is underestimating Tesla's, potential going forward
Yeah.
or something. And I think that's true. I think a lot of these so-called quote unquote analysts, they're not just following Tesla stock. Like you and I, we follow Tesla stock with like 50% or more of our time. Like most analysts have several stocks to cover, and they're just not
Yeah.
they haven't been doing it for years either, and they're just kind of like piggybacking off of other people who are covering several stocks. And it's just it's really an information advantage for us retail investor type folks who focus on Tesla.
Yeah, no, I completely agree. And just to give an idea of the kind of backstop that we're talking about on this core business. So you assuming 296, which is maybe on the most aggressive side, but let's just
And real
assume
quick,
that's
just
the
for
number.
anyone who's listening on Spaces, we're also on. Just so we're talking about a spreadsheet Matt is showing on YouTube Live right now on the Good Soil Investment YouTube channel. I know a number of people have left Twitter Spaces to, I think, go to the YouTube Live channel. But if anyone else who's joined recently in the Twitter Spaces wants to see what we're talking about, they can do that. But this is recorded; it'll be shown on our YouTube Live channel as soon as we're done recording. Recording this. Anyway, sorry, Matt. Go on.
Yeah. No, that's fine. So one of the things I like to do from time to time, just as like a very kind of back of the envelope, just rough check on kind of how the core operations backstop the price, is I just take the most recent quarter and annualize it. So if you take this 296, which is admittedly aggressive, but if you assume
say
that
$3, let's say $3 aggressive. Okay.
So if you annualize that, it's like $11.90 of like annual earnings. And then at the 930 stock price, which it's trading at right now, that's a PE of just 78, which is like,
oh my gosh,
crazy low for a company growing top line by 50% per year.
Yeah.
And with a huge technology advantage and with huge optionality on top of that, with all the things that we talk about, like autonomy and
gotta load up the truck. Yeah, it was as many shares as you can. Yeah, that's insane.
And I forget do you remember what was my was it 226 or something like that? Here, let me just back it off.
Yeah.
Undo some of these changes to get back to my initial model if I can. So then we're at 227. Then if we do the same thing, the 227 annualized, change my formatting here. Sorry, everyone. So that's just over $9 on an annual basis, and then the 930 current stock price over that is a PE of 102. So even that seems really conservative. And if you were to do a forward PE, which is the way most analysts do that, it would be even lower, because your 227 would be probably your lowest earnings per share of any quarter in the year 2022. So I think if you do it that way, it'd be, I don't know, it probably wouldn't be cut in half, but it would be closer to, I don't know, 60 or 70. So like the PE is going to backstop this company. I feel pretty strongly about that.
I agree.
And so
just give it a long enough time horizon, it's going up significantly from here. It doesn't mean the stock can't go to like $500 so irrationally in a downturn. Like that could happen. So just be careful. The stock market can be very. I mean, Tesla was at split adjusted $40 a share not long ago, a few years ago. So it was that low for a few years. Going up to 2018, 2019, and many people who owned it all that time saw this coming, where saw the success of where it is now coming for year, and we all thought it was crazy that the stock was so low. And I kept thinking I was like, I must be going crazy because something either I'm way wrong or the market's way wrong, but I'm sticking to my guns, but
this is the exact model I used in 2019 to kind of load up my truck personally. Cause I was like, the analysts are wrong. Like maybe I'm wrong, but I think I know this stuff. And they were assuming a retraction in gross margins from where they were in Q3 of 2019. And that just made no sense to me, because Fremont was going to continue to be optimized and you were going to add in Shanghai afterwards. So like, I do think this kind of information advantage that we talk about is legitimate. And I think we're at a really reasonable backstop position from a share price perspective right now.
Yeah, absolutely. So we talked a long time about that. Let's, Alex, if you're okay. No, it was good. I think it was good for everyone. Good for me. I mean, that was the first time I really went in detail with you about it this quarter, and it was good to see. And just so everyone knows, Matt, how close were you the last couple of quarters? You got to put up that chart again. I think you put some charts up, and you're such a humble guy. I know you don't want to like tout your own, accuracy, but what was it the last couple of quarters?
Well, I'm so humble that I like make these charts of my accuracy. So maybe I'm not that humble, but
we'll keep it private unless I force you to show it.
So here's like my historical accuracy chart. So the figures in black here are the actual numbers that Tesla posted. And then the figures in green are my estimates, and figures in red are Wall Street's estimates. So like Wall Street has every quarter except for Q4 2020 they've been
Yeah.
significantly under Tesla's actual estimates.
Yeah. Yeah.
So like they just don't seem to learn their lesson, and part of it is complicated because like it's hard to do the detailed build up on like what percentage of revenues are full self-driving related, and then kind of what amount is currently recognizable. That changes over
Hmm.
time, and it's a decent amount of work to kind of track that. So I don't completely begrudge them, but they've just been so wrong, and it's like when are you
Yeah.
going to learn?
Yeah.
So that's where they were. I haven't added in Q4 here, but if we're at roughly 227,
Yeah.
and then
So
what?
approximately half the quarters you've been like spot on, like dead accurate, and you've had a couple misses along with the street. The street has had missed every time, but you've missed in Q2 or something, and but you've been
Yeah.
really
So
close a number of times. You've been like very like within a penny or something last quarter. So,
so the
we'll see.
absolute value of my variances has been 19% on average, and the
Okay.
absolute value of Wall Street's variance has been 63%, which is
Wow.
like horrible. But
Yeah.
it's heavily weighted towards like 2 years ago when they were just like off by 100% all the time.
Yeah.
But
Yeah.
even still, they've been not super accurate in the last couple
Yeah.
quarters.
Yeah, I mean, if you take out your outlier of Q2, of 2021, you've been super close this year. I mean, that's the one quarter but everyone was off that quarter, I think, if I recall. So
Yeah,
everyone was kind
so
of
Tesla
surprised.
really surprised on that. I can't remember the exact situation that was going on there. I think there were some supply chain concerns, and
Yeah, they were able
it
to
just
overcome it.
I was kind of thinking there was a reasonable chance that their cost structure would have
Yeah,
increased more
yeah,
than their revenues did, but I was wrong. They like look at this jump that they had in that period.
yeah,
Kind of drastic. They've been increasing a couple cents here and there, and I was still
yeah,
just assuming they would follow that trend, just increasing a couple
yeah,
cents, and instead they just kind of had a step change, and then again in Q3 they had another step change.
yeah,
um,
yeah.